It's great to be here with Congressman Davidson and Joe Kelly, two great friends of Bitcoin and longtime advocates of financial freedom. There's a lot to talk about. We could be talking about a lot of different things with the two of you, but our topic today is self-custody. And as many of you know, and we've touched on a little bit today, there's been some legislative action in the world of self-custody. And I want to start, Mr. Davidson, with you talking about, you a few years ago, you introduced a 3-page bill, a pretty simple bill, called the Keep Your Coins Act. Tell the audience here what the Keep Your Coins Act tried to do.
Well, the Keep Your Coins Act protects self-custody, and if you look at the Bitcoin white paper, you just have to read the abstract to know that it's protecting a permissionless peer-to-peer payment system. And for a long time, Washington, D.C. and governments around the world decided, oh, we don't really want Bitcoin or we don't want crypto, but in particular, we don't want proof of work in Bitcoin. And, they finally realized, well, we're not going to be able to ban it. So their check down position was, well, let's keep it account-based. And account-based crypto basically says, well, we might not be able to control the whole sector, but we can at least make sure that you only have access to it through a company that we can control through regulatory policy. So it really limits kind of one of the main features of Bitcoin is freedom. And the same kind of thing with cash, right? And so they haven't technically made cash illegal, but they did, going back to 2013 and even at the end of the first Trump administration, Secretary Mnuchin, Treasury Secretary Mnuchin, tried to ban self-custody or limit it. And then, in the Biden administration, CFPB was working on a ban. So we're like, we need to actually overtly protect this. And in a sense of, if you think about this, whether you pro-gun or not pro-gun, it's, the Second Amendment's pretty clear, shall not infringe, right? And you could think if the Second Amendment said, shall not prohibit, well, we'd have a different level of access to the right to keep and bear arms. But we're fighting to even get that language in. And when they do want to accept the language in some of the bills and policies, they want to settle on shall not infringe. And we want something like shall not impair. And it's a limitation on government. Kind of where we are in the state of play today is, can you live with a positive right that we're going to protect your right to self-custody? But that's the state of play. But that's why we introduced it. People say, well, of course you're already allowed. It's private property. You're already allowed to own it. And that's true. I mean, and the right to transact predates any government, but you've seen governments already try to infringe it, so that's why you have to protect it. And in the European Union, they're very clearly targeting it.
So a bill that's hot in Congress right now, active in Congress right now, is this so-called market structure bill. And the version of it that's come out of committee in the House, your committee, the House Financial Services Committee, if I'm not mistaken, is called the Clarity Act. And in Section 105 of the Clarity Act, they have a version of the self-custody provisions, but they're a little bit different than the version that you had in your Keep Your Coins Act. It says, a United States individual shall retain the right to maintain a hardware wallet or software wallet for the purpose of facilitating the individual's own lawful custody of digital assets and engage in direct peer-to-peer transactions, et cetera, if those individuals are not financial institutions, if they involve no transactions that the government is forbidding through sanctions. And this section around self-custody and peer-to-peer transmission does not apply to limit, it doesn't limit the authority of the Secretary of the Treasury, the Securities and Exchange Commission, the Commodity Futures Trading Commission, or the primary federal payment stablecoin regulators to carry out any enforcement action or special measure authorized under applicable law, including the Bank Secrecy Act, et cetera, et cetera, et cetera. So my question is, there's a lot of positive energy towards the market structure bill in this community, in Congress, but that seems like, is that really legalizing peer-to-peer transactions, or is that basically saying we're okay with peer-to-peer transactions so long as the government is okay with it, right? You see what I'm saying?
Yeah, it's very weak, and I got to say, we're still working to improve it. And as recently as today, I'm talking with people in the administration, senators, and House Financial Services colleagues about self-custody. So I don't love the place that the market structure bill is. But if you look at the stablecoin bill, we couldn't get a reference to self-custody in either stablecoin bill. Really, the Genius Act in the Senate or the Stable Act in the House. And in particular, you really would want it in a payment instrument product versus a market structure product. But you also don't have a path to pass it as a standalone bill, right? So that's the reality we're in. And so you're trying to get as much protection for self-custody as you can get. But when you look at all the clauses and, well, but if, it really isn't a very robust protection. And that's where, like, you think, in a way, all this stuff has given me such an appreciation for the founding fathers that really drafted the Bill of Rights and our Constitution, and the thought that they put into some of these clauses. And you look like negative rights, not positive rights, the government not the giver of your rights. And if you think about transactions, you know, pre-government, we inherently had a right to transact. Then some government or some nosy neighbor decided, hey, what you guys doing over there? Like, well, none of your business. You know, now we got a government that wants to know everything in the world about you, and because of the tax return, you know, they should have to get a warrant or a subpoena to know that much about you. But the reality is, to do just about anything, you have to do that. And the Bank Secrecy Act was a massive infringement on it. So in the realm of self-custody, if we don't protect this more overtly, you go back to like right before, you know, it was like one of the first public appearances with Sam Bankman-Fried in Congress. He came and testified and maybe bought shoes earlier that day or something. And so he's there, and all the CEOs of the big crypto world were there, and they were all tripping over themselves to talk about how well they could spy on their customers on behalf of the government. And I was like, oh, this is demoralizing. But that's kind of been the tension between putting this deal together. You look at the nature of token taxonomy, which we drafted in 2018. It was a very simple bill that basically built a bright line test for what is and is not a security, four-part test, just like Howey, that applied it to digital assets. But to regulate market structure now, we've got some hundreds of pages out there creating whole new regulatory bodies and all kinds of agencies to do everything. I mean, it's not a very effective system in terms of a purist, what I would love to see. But I mean, I thought that we would be able to do that like in less than a year. And here we are 7 years later, and we're still bickering over it. And we can't protect really basic things. So the challenge of doing this is just, it's amazing what they could do when they put the Constitution and the Bill of Rights together.
This is a good segue to bring you in, Joe. You run one of the most important collaborative custody companies in the world, and a real anchor, the Austin Bitcoin ecosystem where I live, and I'm your neighbor, so thank you for that. Tell us about how your business interacts with the government. What do you have to deal with? Where are you insulated from a lot of this activity? Where are you dealing with regulators or with Washington right now?
I'd first frame it in terms of Unchained and our clients. So we serve as a gateway for a lot of our clients to self-custody. They might be nervous to try it out on their own. And today, Unchained helps secure around $10 billion of Bitcoin for roughly 10,000 clients. And that equates to around 20,000 keys. So it also contextualize the assets that are here and what kind of form they live in. It's not this centralized custodian. It's not this kind of centralized panopticon looking at clients. I think in that same way, being a gateway means we are also regulated in how clients can buy and sell Bitcoin through us. So there's some level of just basic diligence, client due diligence, KYC, ML things that we have to provide. So I think it's a very good bridge. I think I really like a lot of the comments. I could listen to you talk about this for a lot of time, Representative Davidson, but I think that the question of self-custody does really go back to a lot of these founding father type elements and the inalienable rights to property, and just kind of, it's this chance to kind of reset a lot of financial transactions, a lot of the financials ecosystem in something different that's not so hobbled by the kinds of things you live with every day, trying to push bills through. I really commend the Keep Your Coins bill. It's like the shortest, simplest bill I think I've ever seen or read. It was like a half page of just, this is it. This is the right to self-custody.
What, have you ever had situations at Unchained, and maybe you can't talk about it, but where the government has said, hey, there's somebody who's a client of yours that we need to look into? What sort of process do you have if and when that happens?
I mean, we are a regulated money services business. We have to file suspicious activity reports We do that in the course of business. Can't comment on any particular case or necessarily how that always looks and works, but I do think we're that great kind of middle ground between just like what maybe reasonably people want to see out of regulation and preventing terrorism financing and a lot of fraud and abuse that's out there. And that's also even for our client benefit. And back to one of the points of I think that why I think self-custody should be just such a bipartisan thing is because it's both about these inalienable property rights, but also consumer protection against FTX type blowups and things like that. So we really live at a nexus of, I think, the right trade-off on all these kinds of concerns.
Mr. Davidson, when you were debating the Clarity Act in the House Financial Services Committee, what were the arguments made by your fellow Republicans as to why we had to clamp down on self-custody and not give it a more robust protection like you had in your original bill?
Yeah, so, I mean, some people really want account-based because they want to just keep us safe, right? They feel like the only way to really make sure that people aren't abusing self-custody is, to keep it in an account. Why? Well, because people that would, they could leave the country with more than $10,000. I mean, if you have self-custody, you could hold 1,000 Bitcoin on, your own, personal wallet. And I'm like, well, like if you can memorize a seed phrase, you could do the same thing. You don't need a device. So people don't really understand that it's not like a USB thumb drive in the sense that the money's right here on the drive. I could just have to plug it in and I can have the money. So I think there's a lot of lack of true understanding, but they do get the idea that if you really have self-custody, well, like it's yours. and like, you're like, yeah, that's a feature, not a bug. Like, it's my stuff, so like, why wouldn't I be allowed to have it? Oh, well, it is your stuff, but we'll trust someone else to take care of it for you. And honestly, that's the debate. And it's really just so that they can have a look into where the money's flowing. Some people want to do that to keep us safe, and some people want to do that to control and coerce people. But to me, it's like, look, you shouldn't be able to do that without a warrant or subpoena. And if you look fundamentally, the property rights in our country, it really is just a very basic fundamental right. Is like, it's my stuff and you can't have it. And I'm trying to do a transaction with a friend here, so unless you can show that we're doing something illegal, which isn't on our burden to prove to you that we're not doing something illegal. The burden of proof is the other way. Well, then, no. But the way we prove it is we monitor your financial transactions. You're like, well, since when? Well, since the Bank Secrecy Act. And that highlights really, I mean, we're nowhere near the votes to get rid of the Bank Secrecy Act or change it. But,
someday.
Yeah, so that's part of why, Tim Height, who some of you guys have not gotten to know, worked with me, and that's why we landed on Keep Your Coins, because it mimics the Know Your Customer, which is you can run a money service business as long as you spy on your customer pretty well for us. I mean, that's not unique. That's every country around the world. That's the way that you get to work in financial services. The governments at some level keep everybody safe that way. And look, I'm the chairman for National Security and Illicit Finance. Our subcommittee oversees FinCEN and all this kind of, activity. We have jurisdiction over this. I'm for, some level of this financial intelligence. We need to do it. But the idea that and the creepiest extension of this ultimately is digital ID and central bank digital currency. So if you look at what, some of, like Bill Foster, for example, is like the chief proponent of digital ID. And he's like, well, okay, I could be okay with that as long as we can assign a digital ID to every wallet address, and we know this is you, and then we can follow everything that you do with your money. And, that gets pretty creepy. I mean, it's the ultimate, for Lord of the Ring fans, I always say it's like the one ring to rule them all. If the government has this power to see every single detail of every transaction, I mean, that is the most pervasive. Yeah. It is the biggest power, and the only good thing to do with the one ring to rule them all is to destroy it, right?
We got half a minute, but Joe, I want to make sure you have a chance to comment on this. I mean, in your business, you're having to convince people, presumably, to do this form of self-custody that Unchained produces. What are the arguments that you hear against collaborative custody that you feel have been the ones you've had to put the most work into countering?
I think I use the word convince. I'd say usually by the time a client comes to Unchained, they're already actually self-convinced they want to self-custody. And we see that conviction only grows through experiences like FTX or the bank failures of SVB and Signature in recent years. And so, people's pause where they usually have hesitation is like, will I do it correctly? Or how do I know once I'm truly on my own? That's a lot of responsibility for an important asset to them. And so that's just where our education and hand-holding comes in, and that's part of how we build our business model.
All right, well, that's all the time we have, but thank you both, Mr. Davidson and Joe Kelly, and I hope we get better outcomes and get the Keep Your Coins Act into law. Thank you.